Good day, all. Ira Epstein of Linn & Associates with your metals market wrap-up for this pretty crazy trading day of Monday, the 6th of January, 2020, and the time about 4:33 rather in the afternoon Central Time. Can you believe the stock market's up? If you woke up this morning and looked at it, was in the toilet, came back 300 points off the lows in the Dow. The gold, which went up to the nearly 1591 level, gave up quite a bit of those gains, closing in the lower part of the day, only off the lows by about $6, still up $16 on the day. And the silver market ran into pretty stiff resistance at its upper Bollinger Band. Now, we heard late in the day today that the U.S. coalition force is supposedly going to start pulling out of Iraq now. The Iraqi parliament yesterday voted for that. Not all the members were there by a long shot, but I think this is one of the ways to soothe the area to a degree. We still haven't seen the other shoe drop, if you will, from Iran. Don't know what they're going to do, when they're going to do it. They're on their own timetable, but I think most of us do expect them to do a reprisal of some type. When you look at the gold, obviously this is the highest close we've had in a long time at the 1568.80 level. You have a gap in the chart. Gaps often get filled, my friends. Go back on your charts, find how many you can find that don't get filled. Now, if you were to have an attack tonight and it were serious and the market were to explode to the upside, getting over today's high, when it did that, you could have what's called a breakaway and then a runaway gap. You don't have that right now. You just got a gap in the chart. So somewhere between the highs of 1556.60 on Friday and today's low of 1562.30, that is the zone that I expect the market to try to fill very shortly. When you look at the swing line, you still have the pattern of higher lows and higher highs. When you look at the moving averages, I've been prepping you for over a week that I thought the 18-day average is going to get over that 100-day. I have not changed my opinion. I think that's going to happen in fairly short order. If you take a look, you're jumping at the tune of about $4 or $5 a day. So to get over that tomorrow, it could happen when the market reopens tonight. And the reason is you only have to go up about $3.50, $4 for that to occur. So I'm still looking at that as a major support zone in the market. And I think the market's ahead of itself. I realize with all that's going on, you'll say different or other people will. But you only stay over Bollinger Bands 5% of the time. Throw the name off the chart. Forget the price of it. Would you want to buy over a Bollinger Band on that type of spike? That's what you've got to ask yourself. If not, this could be where the pros are taking some money off the table, looking for opportunities back on the downside. When we look at the slow stochastic oscillator, it's still embedded. So the upper Bollinger Band comes in right now in the neighborhood of 1557.60. It's climbing to the tune right now of about $10 a day, something in that area. So to get prices under it doesn't take a lot. I'm still looking at that filling of the gap. That could be the number that the market looks at, and then we'll take another look to see what things do. When we come to GLD, you've stayed over the upper Bollinger Band. This market's ahead of itself. It too has a gap in it. I wouldn't be surprised to see that filled, and I wouldn't be surprised this week to see prices try to get under the upper Bollinger Band as long as we don't get some type of reprisal that is so out of norm with the marketplace that gold just takes off to the upside. When looking at the gold-silver ratio, it does not favor silver. It's still favoring the gold market. It was for a while in a good correction. Then the market started coming up, and the resistance is in the neighborhood of 86 ounces of silver to get 1 ounce of gold. You finished the day at 86.30, so it's approximately there. I'd be more worried if we got up and over this high than anything that silver would have a problem with holding on to gains. When we come to the GDX, the miners, you can see how the upper Bollinger Band on Friday proved to be a problem for the market, and now you're right back down. And you also stepped out of the trend. What do I mean by that? You have a higher high, lower low pattern, and momentum in the slow stochastic indicator, well, it's lost its embedded reading. So the market is saying it might want to correct more. If that's the case, wherever this comes in, the 18-day average could be the support in the market. When we come to the juniors, you got the higher high, the lower low. Do you see that? So Friday's action was the whole key. And in this market, momentum is overbought, begging a correction of some type. Silver market. If you get my morning subscriber video, I could not have been clearer this morning with what I was saying. As the market was jumping, I said, folks, if you're in that silver, be careful. You're offered an area here at that upper Bollinger Band where this market might prove to be too expensive. And the reason I said that is because in the past, when we had that big run up in silver, a lot of traders were playing that and got ahead, and they don't know at times you take some money off the table. You have to give up your whole position. You have an embedded reading, but staying over that Bollinger Band has been difficult. Now, the support in the market, the 100-day average first at 1768. From where you're at, that's 50 cents away. So if one's looking for support, I'm concerned that it's so far away. In the copper market, was today the washout event? Might have been. And I realized, I say today, when you had a lower price on Friday, I can see what happened. But we didn't follow through from Friday's break. Rather, the market stayed right at that Bollinger Band bottom and tried to rally. Now, there's nothing on this chart that says buy me. You still have lower highs, lower lows. But you do have issues here having, say, maybe if you're short, you're taking money off the table because you're not able to punch through that Bollinger Band. Now you also have a situation where, as much as the world is scared as to all that is going on with the U.S. and Iran, at least the coalition forces sound like they're going to pull out. That is a positive. We have the Chinese-U.S. deal, the delegation flying in from China a week from today. We have the USMCA deal that might get passage quicker rather than later, especially if over the next 2 or 3 days, when we get members of Congress, both the Senate and the House, coming back to their chambers, if we don't get the impeachment articles, maybe the Senate takes up the USMCA deal. That might be friendly to the copper market too. In the platinum market, you're at a resistance zone. The upper Bollinger Band, you know what I'm going to tell you. The first time you hit it, you're often in a resistance zone. I have no reason to think that's not true. I have every reason to believe that's the case. And what is the strongest metal again? The palladium market. It's at new all-time highs. Probably what got behind this was German registration of new cars. It went up 20% in December. I kept reading the article going, is it that much? That's huge. And that's demand for it just out of parts of Europe, as you can imagine. So I was quite impressed with that. And the dollar. People are dumping the dollar. They dumped the yen today. You've got a pattern of lower highs, lower lows. The market failed on its attempt at the 18-day average of closes. For whatever reason, the market's not in the panic state that you would think it might be in. And this is an opportunity for traders that want to play the stock indices to use those 1/10 size contracts. I can't explain enough. I have some people that said, Ira, what's the point of it? If I would have done it before and so on. I'd rather trade the full size. That's great, but the margins are different, the risk is different, and you don't get to build a position if you want it. I've used it in my updates, and those of you that know that, you see how I've used them, and I still think this is a very viable product. Instead of $50 a full point, it's $5, for example. And you take a look at all the markets, and these are what the ticks are worth. That's substantially different, and it lets you build. And you can build 10 contracts at a time, for example, they're 1/10 the size, and deliver them against a full-size contract. The commission, $1 a side. So if you're looking for more information on this, we have it. Just call my staff at 866-973-2077. You can visit our website, but at the end of the word, www.iraepstein.com, put a / if you will, type in the word micro. It explains how we work with that. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.